Welcome everybody. This is the Saturday morning Viper Trading webinar. If you are here to learn about trading the futures markets using the Viper tools, you are absolutely in the right place. First, we have to get our disclaimer out of the way. We can get on to some charts. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Okay. So let's see here. I was having a little bit of technical issues this morning, but I think I can work through them. Hang tight. Trying to get some charts up here for us to take a peek at. And here's what we're going to do. Let's come over here to screen one. Let's see here. Let's see, switch over to screen one. Stand by. Okay, here we go. All right. Today's topic is developing the eye to see those trades. And so what I want to do today is I want to keep this pretty light and positive. And when we say develop the eye to see the trades, what do you think we're talking about? What does that mean, developing the eye to see those trades? Does that mean you go out and get some new glasses? Go to an ophthalmologist and get some contacts? Well, no, yeah, it's seeing the entries. There you go, Brian. My apologies to everybody. I got a little bit of a cold kicking in here. Try to fight through it as best I can today. Yeah, it's seeing the entries, So what I want to do is we're going to do a series of exercises today where we're going to look at trade entries on all sorts of different instruments. Okay? Yeah, let's see feedback here. See the trade developing. That's good, Chris. Recognizing a viable trade pattern. That's right, Rob. Anticipating to participate where the trade will be. Perfect. Getting comfortable with the market movement and seeing the right location for good entries. That's right, Richard. Perfect. So let's look at some, excuse me. Hold on a second. Let's do this. Before we start doing exercises where we start looking for trades, let's just look at the chart together. The first couple of trade entries. Hey, quiet. Good morning. Welcome. If you're just coming in, don't worry. We're just getting started. You haven't missed anything. I'm going to start with our favorite trade, which is the retracement to the midband trade. All right, so we have YM here, and we clearly see that YM here is in a strong uptrend. Uptrend being where we have thrusting pushes in the up direction, and we have retracements like such. And our favorite trade, most of you know this, of course, is a midband trade. Here's a case here where we come down very close to the midband. We can use our region box from Object Trader. We can use limit orders. We can use all manner of different ways to enter the trade. But the bottom line is it came right near our midband and bounced. And so we're getting along. Generally, in an uptrend, we're going to look to buy. We're buying supports, pullbacks into supports, right? Here's another one over here. Right here. We get a thrust, we get some consolidation, a little triple top, pull back, sit on the midband, re-enter long, and off she goes. And I think this is where YM closed at fresh all-time highs for the Dow on Friday, yesterday afternoon. Now, sometimes these trades are not so simple. Those are pretty clean and simple. retracements right back to the midband in the case of an uptrend. Now, where it gets a little more tricky is, let's look at some examples where it's a little more tricky, but still fairly straightforward. Another midband trade right here that worked out right in here. Now, here's where it gets tricky. Sometimes what will happen is the market will come and sit on the midband right here like this. And you don't get long, excuse me, you don't get long, but it does go deeper down into here. So the question is, what do you do in situations like this? Well, you have two choices. The first choice is, and not really the preferred choice, you can extend the length of time that you have this region box drawn and just simply let it continue to draw out into the future like this, in which case you would have been filled most likely long on a bar right here. The preferred way when a market goes a little deeper, as it did here, is to go ahead and just redraw a different box at a lower location, still looking for the long. In this case, you would have been filled long most likely on this bar right here. All right, now those are pretty straightforward. Let's go and look at some areas that are not so clear and clean, and it makes it a little tougher. Let's look at an area that looks like this. Hold on, I'm going to show it to you. Yeah, you move the region box down, James. In that case we just looked at, that's the preferred scenario. Simply because, here, let me go back to that. Hold on, let me go back to that. Let's go back to that last box there. Talk about that for 1 second. Hold on. Sorry about that. The stop loss. Okay, hold on. Let's go back to this. There's some questions coming in about this last situation here. So what we're talking about is buying, in the case of an uptrend, we are buying retracements at or close to the midband. In this scenario here, we'd come out of this box, so we were long. We took the scalper coin at the top, pulls back, gives us a chance to re-enter. We never close above this first box here. So technically speaking, from a region point of view, you never got long here. Okay? So just to be clear, what I'm saying is that the bars then go below the midband into here. And so we would simply either redraw this box down here or delete the previous box and put a new region right here. Your stop loss, now when you are filled, and depending on exactly when you drew the box, you'll be filled either here on that bar closing above the region box or this bar right here. Now, Object Trader, some of you might be new, so let me just explain this, is the way it works is Object Trader will fire a market order to get long on the close of that bar outside of the region box. If you have the default set, which is 10 or 12 or 15 ticks, depending on what you have in there, Object Trader will automatically come below this fill, and let's just say hypothetically it was 35, right in here, 135. 15 ticks below there would be 20. So it will come down here to 120 and put an initial stop loss located right here. Let's suppose that you had set up your initial target and you're trading one lot at 20 ticks. So Object Trader will come 20 ticks above your entry from 135, and at 155 it will put a target automatically like that. Now, if you set up Object Trader to manage your trail stops, it will, depending on the condition that you set, it will automatically trail the stop for you. as the market moves up. And even if you didn't, most of you know this is working with Object Trader, is you can move the targets and stops on the chart itself. So essentially you're kind of boxing the trade in as it moves in your favor. So like in the live room, you might hear a comment like, okay, take your targets out of the way. And so what that means is that you have a nice running trade in play, in which case you don't want to, when you have a nice running trade, what you want to do is you want to let it run as far as it can possibly go. In other words, you don't want to choke that. You don't want to, this could turn out to be a 40, 50 tick trade. You don't know. So you don't want to artificially choke it off here at 20 ticks, or even in here. You just let the target run, and then as the trail stop comes up, and then someplace up here you're taken out. So what you're going to find as time goes on is that, most of your money is going to be made from these long running trades like this. Now, that's not to say that you can't make money scalping. I mean, some of these scalpers turn out to be as much as 10, 12, 15, I've seen 20 tick scalpers. So what I'm saying is you can make money doing these scalp trades like this, but a lot of your money is going to be made with these long runners like that, right? I mean, in this case here, let's compare the two on these two trades here, these two long trades. Let's say in this trade right here, the scalpy trade, it got in from 33, and maybe you got out at, 40, 43 by the time it pulled back here. So yeah, you netted about 10, 12 ticks maybe, depending on your fills. Now let's compare it to this one. Here you're filled, let's say around 34, 35 long. And you trail the stop all the way up here to 88, say 90. So we were filled at what? 35 all the way to 90. That's 55 ticks. What I'm trying to show here is the fact that the runners could be as much as 5 times. You would have to take the equivalent of 5 scalpies here to get what you got in one runner here. So what we're really looking for in the course of a trading session is to try to capture as many or even just one or two of these nice running trades like this. We call that one and done. One or two and done. Now, I want to contrast this nice uptrending movement with a different type of price action that we need to be able to see and decide what we're going to do. I'm going to show another price action setup, and I want you to tell me time-wise or location-wise where you see the trades. Ready? This is on YM. So the time is down here. I am in California, so this is Pacific time. So let's call out a time where you see a good trade. And then, or location-wise. So you could say, 25,085, 25,123. Where do you see some good trades here? I'll give you 30 seconds. Go ahead and type in where you see some good trades on this chart. Where's a good quality trade? Or two. We'll give you another 20 seconds. Where's those good trades? This is part of developing the eye, right? The eye of the tiger. Where is that tiger sitting? So over here, the market opens at 6:30, so 6:38, we're 8 minutes into the open on WYME. And it goes all the way over here to almost 8 o'clock. So this is like when the room was open, right in here. There is another option for you. I would call it the NT or no trade option. Anybody taking that one? I don't see many numbers coming in. Pretty choppy, huh, Bruce? Yeah. God taking the no trade option. Yeah, now if you recall, so what happened here, let's go back. This is from Friday morning, okay? And here's what happened. Here is 6:30 over here. So in fact, I think Gary opens the room at 6 o'clock, well, just before 6 o'clock. So let's show 6 o'clock. You might have been looking at it 6 o'clock. So in West Coast time, that's 30 minutes before the open of the market. Right around 6 o'clock, you could make the case, and this is a little bit of a large mid-band box, but you could make the case that you had a box here that eventually did get filled short. I don't know if you took this in the room. I wasn't there. You might remember. Maybe Gary called a short. I'm not sure exactly how that panned out because I know mainly you're looking at oil and gold sometimes. But you could make the case, yes, that this was a short. You had a shallow retracement here where you could have got in if you missed the initial entry. And then this was still pretty choppy here at 6:30. Here's 6:30, open in the market right here. You had a series of shallow retracements where you could have gotten short again. And in the case here of getting short, you would have trailed your stop down and pulled off a few ticks and got out somewhere down here. Now, here's where things get interesting. He got that short, James? Were you in the room with a time box? Oh, cool. Good. Excellent. Yeah. Well, I mean, arguably in the first 10, 15 minutes, yes, you did. You were trading the short side of Weimer. You had the initial entry over here at 6 o'clock. Well, no, 6:08, 6:08, 6:10-ish. Shallow retracements to get short here. We see that trend was starting to head down. And then everybody more or less probably stopped out somewhere in here on the initial shorts. Right. You had another box form here. I remember watching this. I can't remember if I took it. At 6:43. See the formation of another box here? Now, when we talk about region boxes, I want to be clear about something. It's important to note we don't want them to be too large. We like this location. It's right at the midband. We like that, yes? However, notice that the bottom of the box is right here around 105 or so, and the top is at 113, so 8 ticks. That's not too bad. Once these region boxes where you take trades, long or short, want to be under 10 to 12 ticks. So 8 ticks is acceptable. This box is okay. If you get much bigger than this, it starts to get into you start to get into what's called a breakout trade. Let's look at a case where a box would not be good. This box would be good. Under 10 ticks, that's acceptable. Now, if you looked at this area here and thought that you'd put a box around it, let's look at an example where a region box would be too large, in our opinion. This would not want to be a box. Although it worked out to the upside, you got a little scalper perhaps. It's pretty large. You're looking at a box that goes from 94 all the way up to 106. Yeah, so this is 12 ticks or larger. So what I'm saying explicitly, to be clear, is you want region boxes to be as close to the midband as possible. They can be outside the midband, but generally speaking, we want them right in here. That's our sweet spot. And we want them to be under 10 to 12 ticks. 8 is good. 6 is great. Here, this one would have been 05 to 11, 12. So that's like 6, 7 ticks. Perfect. The tighter, the better. Now, that being said, I want to show something here. One of the most important things to try to develop the eye for is when markets go into range-bound activity or price action. Here's the way we can do that very quickly. You take whenever, so here we're coming up on 7 a.m. Pacific time, and we can see here that we have a swing located here. So we put a line there, right? And we see that we have a swing located more or less down in this area right here. What we want to do, as much as possible if we can, going forward each morning, is, and Gary does this in the room, and what we need to do is try to develop our skill sets ourselves to do it on our charts ourselves. So just a quick, I don't want to get too sidetracked here, but just a quick comment about the live trading room. When we started Viper Trading, the idea that we had was to develop the software and the tools for Gary and I. We initially, we built tools. We're traders. We trade for a living. And we built the tools to help us and other traders see trades. The live room initially was intended to be where a collection of traders got together and we discussed, we were taking our own trades, we were seeing our own trades, and we shared some thoughts relative to where, support and resistance and good trade entries could be. And so that's still the mandate of the room today. So what I'm saying is that what we want everyone to do is learn to see the trade entries yourselves. So that when you see a chart like this, you automatically, your eye is trained to say, hey, I see a region box here. Hey, I see support down here. I'm going to put a line up here at this resistance. And so on your charts that you're looking at yourself, we want you to actively actually do this. And the reason that's important is that when you hear a call in the room that call should correspond with something you already see yourself. I don't know if that makes sense to anybody. In other words, you should be able to see trades on the charts yourselves. And then when you hear a call in the room, it's just confirming what you already see. That's the ideal condition. You want to get to that place. That's the happy place. Then you're not so reliant on hearing things, right? Because you're seeing them yourself. Does that make sense, Chris? James, Brian? Good. Okay, good. That makes sense. Now, the reason this is important is I think we would all agree in the case of YM here that as long as the market stayed in the confines of these two lines, are we trending or not trending inside of here? Are we trending? If it stays inside of these lines, are we going to be trending or range bound? Trending or range bound? What do you think, team? What say you, team? Okay, here we're at 7 o'clock. Here we're at 7:16. We break down just a little bit below it. Yeah, we're no trend. Right, we're in a range. Exactly. Now let me show you why this is important. Now, if you remember, for almost an hour, you didn't hear hardly any trade calls on YM. In fact, I remember saying YM is in a range with support down there at 90.95 and resistance up near 20.25. And you're basically in a 15-20 tick range, and you didn't hear hardly any calls on trades. So why was that? Well, let's take a look at it. When a market is stuck as it is right here, and let me just show you what I'm talking about. The initial range here, you could say, was from 94.95 all the way up here to 23.25. So that's actually closer to 30 ticks. And if a range was this large, our rule is over 20.25 ticks. So a 30 tick range is technically tradable. In other words, you can still take mid-band trades, and there's enough meat on the bone. Let's see if I can draw this right. There's enough meat on the bone to make some money. What meat on the bone meaning? If you get long or short from the mid-band, that you can at least get a scalp off to the top or bottom of the range. That's what we're saying. When we say meat on the bone, we're saying there's enough to at least get a scalp off. Now, when a market starts doing something like this, where the range tightens like this, so it's essentially what you have is a range within a range. Yes? See it? And this went on for the better part of 650 to 7. Yeah, so this is about 40 minutes. It just was in this mind-numbing sideways chop here. Let me ask you this question. Inside of here where these yellow bars are, would it be wise to trade the midband? Is trading the midband boxes a good idea in something like this? What do you think? So you're trying to draw boxes in here. What do you think? How do we feel about that right in here? No, 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 no. Risky, Nasir, right? No, 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 no. Ralph, Walter, Chris, that's right, everybody. Negatory. This is why the room went silent on YM Friday morning, is we were just in this mind-numbing chop for about 20 minutes. Most cases, I have to tell you, it's probably best to avoid this. You just don't want to get in the middle of this, okay? It's going to chop you up. It's going to chop you up. And you want to see this as quickly as possible. So when you start seeing it go sideways like this, you want to just avoid it until it can figure out what it's going to do. Let's go on to a different instrument. Any other questions? I think we did, James. That's another way to tell. Everybody's saying, well, you armchair quarterback, Charles, here you are Saturday morning sitting all comfy in your office, and you can just say, oh, yeah, well, retrospectively, I wouldn't have taken any trades in there. I think we did call a trade in there, and it didn't work out. That's right. That's another way to tell. You take a mid-band trade, and you get popped. That's usually an indication, hey, I see a tight range here that's not tradable. I'm just going to sit this out until it works itself out. All right, now I do want to check some other instruments. Okay, go ahead and type in what you would like to see. We've got about half the webinar left here. Go ahead and whatever you want to see, go ahead and type the instrument name in. I'm going to jot it down, and we shall pull it up. Ooh, a lot of RTYs. Okay. What's next on our little visit chart-wise today? I see some NASDAQs coming in. Our friend Mr. Nazaru, NQ, good for you. A couple of CLs from Richard and Minaj. Hey, Minaj, I didn't see you come in there. Good morning. We got RTY, NQ, and CL. Anything else? All right, stand by. I'm going to load up RTY. Now, in terms of volatility, hold on a second. I'd like to share something. A 2-second discussion about volatility and risk. I'll make this quick. In terms of if you were looking at equity markets, the slowest mover, and we all know this like a little snail, is ES, the E-mini S&P. 1250 a tick, slow mover. In fact, I'll try to squeak a little screenshot of that in before we wrap up this morning. Next up the scale in terms of volatility is YM, $5 a tick. And you can see here some mornings it moves, not as fast as the other ones, and some mornings it's choppy. The next one up on the docket would be Russell, RTY. We're going to look at this right now. So think of it this way. On a scale from 1 to 10, 1 being the slowest and 10 being the fastest, I would put ES down in the 1, 2, 3 area. Weimer probably about a 4. I put the Russell in the middle, maybe around 5 or 6 in terms of volatility, speed of volatility, and depth of movement. And up at the highest end of speed would be NASDAQ. That'd be at the 8, 9, 10 level, especially when the algos are pumping. So when we think about volatility and we think about risk, it's really a double-edged sword, right? Because on the one hand, you say, well, I like the fact that NASDAQ can get 80 tick moves, 60 tick moves. I like that. 100 tick moves on NASDAQ, not unusual. I want that volatility. I know I can make money. But the trade-off is it can move so fast sometimes it can beat you up a little bit and take your money away before it makes that big move. Does that make sense? Let's take a look at the Russell. Here's Roosty Bird. This is kind of I would say this instrument is kind of, like I said, in the middle between the ES and the YM slow movers and NASI, the high octane, NASI spazzy fast mover. Let's look at some instances here. Now, into the close, all the markets ran up to fresh highs. Now notice here, if you recall, the YM chart looked very similar to this. However, some market, very different price action can be taken into account here. For instance, we can see that we had a little box right here. I don't know if anybody was trading this. This would have been about 10:30 on Friday morning. We can clearly see mid-man box market took off and just ran up to the close. However, each one of these thrusts were only met with somewhat shallow retracements. Notice here, in this retracement here, we broke the stealth line, we broke line 6, and we sat right here. So here's a case where if you wanted to participate in the upward move, you never made it back to the mid-band. Notice here, it did not get back to here. So what I'm saying is this, is that if you are a mid-band trader and you say, well, you know, Charles, I really want the market to get down here to get in. I want to see a deep retracement, and it's got to come to the mid-band. In the case of shallow retracements in a powerful uptrend like this, you would have missed the whole, you would have wound up missing it. So what we're saying is, it's acceptable to take a shallow retracement like this, and what would have alleviated some of your fear a little bit in getting into this is the fact that you keep a tight stop on it. In other words, if you're filled here long when it came out of this region, say right here, one of these bars right here, if you're getting long, and then you trailed it up and off you went, and you cut sort of the tail end of this long uptrend, you don't have to put a stop all the way down here. It's because what we see is that a lot of traders have some trepidation. There's some fear in the fact that it's not pulled back to the mid-band here, and you're getting in at somewhat of an elevated level. But in a strong uptrend, you can alleviate some of those fears because, if you got popped, this would only cost you maybe 5 or 6 ticks. Yeah, and there's a swing right here. That's true, Adam. Good point. This is more or less where it kind of broke out from down there, from this earlier consolidation patch. So yeah, you did have some support right in here. Okay, good. Now let's look at let's go back to the open on the Russell and see how we would have traded the open. Stand by. Let's scroll back on the Russell. Let's go back to 630. All right. I'm going to show the open as it started and not show what happens until after the open, and then we're going to look at it together. Okay, let me go back to 630. Okay, here's the Russell at 630. This is the open on Friday right here. Testing audio. Hello? Carl, did we lose you? You back? Testing audio. Everybody hear me okay? Audio, video, cursor moving. Everybody okay? See me? See this? We're good? Okay, good. All right. All right, so here's what we want to do. Remember we talked about a couple of minutes ago how we all want to see the trades ourselves, and the room is more or less confirmation of what we already see for ourselves. So one thing we have to do, it's really important, every morning when we get up and we look at our charts, is we take and we draw support and resistance lines. So in this case on Russell, going into the open, we would simply put a line up here, right? And we would put a line down here. See how easy that was? That only took, a couple of seconds. And it's pretty easy to see, right? You can use the predictors to see it. You can toggle off, toggle them on, off or on. So just real quick to this point for everybody who's new. What we do is you look for what we call a preponderance of candles and swings that are located loosely or roughly close to each other. So you can see here that some of the candles are going to go slightly above the line and some are going to be slightly below it. So we just simply would have put a line pretty close to where we see resistance. And conversely, down here at the bottom, we simply put a line close to where we see some collections of candles together. Some are going to be a little bit above it, and some are going to be a little bit below it. So in that sense, if you think about support and resistance, I don't want to say they're just a concept, but they're more or less an area where we see support and resistance. It's not necessarily an exact number. Now, you might hear something like, well, I see resistance on Russell up here around the 62, 62.50 area. So in essence, what we're saying is, yeah, there's resistance up in here. And what we mean by that is that when the market comes up here, it tends to hit it and pull back. Likewise, on the downside, we might say, well, there's support right around under 60, around that 59.50 area. By definition, that would mean support is down here. Not a precise exact number per se, but that when the market comes down into here, it tends to bounce. So this is our measurement of tradability as far as a range goes. So from here, 59.50 to 61.50 is 20 ticks. This is sort of at the lowest end of tradability in terms of a range. Like we looked at on YM, if it's much tighter than this, it's not really tradable, especially if you're down in the 10, 12 tick area. Okay? Now, if you said, well, I'll tell you what, I see this range, I put my lines on my chart, I'm coming into the open here at 6:30. I'm not really comfortable trading that range. I want to see the market do something on the Russell before I decide to get in. Here's 6:30 right here. And you know what? That's perfectly acceptable. I want to be, we did, hold on. See, that's the weird thing about this cold. You can be going perfectly fine for like 30 minutes or an hour, and then next thing you go into a coughing tirade. It's really frustrating. Anyway, there are times where you might not want to trade. It is perfectly acceptable. It's a how would you say, a personal standard. Some people would look at this range and say, wow, you know what? This range is really clear. I like this range. It's over 20 ticks. I'm going to buy support. I'll take profits up here. And, I might flip and get short. I'll cover down here, and I'll look to buy, et cetera, et cetera. So some traders, many of you here, might like this range and trade ranges very well. And that's cool. That's perfectly acceptable. However, there are some of you who aren't comfortable with ranges. You say, well, I see this range. I put my lines on the chart. I see support down there. I do. I put a line up here. I see resistance up here. But you know what? I'm just not comfortable with this. I feel like I'm going to buy here. It's going to come up, flip in my face. I'm going to get stopped out. And if I short this, well, the background is green. It's heading up. Maybe I shouldn't take a short, and it's going to flip and take off on me. I'm going to wait. And you know what? That's perfectly acceptable too. I mean, there's lots of traders that trade with us all over the world on all sorts of different instruments. And if you don't like ranges and you're just not comfortable and you're not good at them, well, then you got to wait. Now let's look at what happens here. I'm going to advance the chart beyond the open. Ready? Here we go. 6:30, still in the range, right? 6:31, 6:32. We just checked the top. Still in the range, right? What was our agreement? Our little pinky swear? As long as we stay in the confines of the yellow lines, we are still in the range. Yes? That's how you can tell on your own chart without any help from us. You can do it yourself, right? All right, let's see what happens next. All right, now let's look at 634 on the Russell. What is going on right here? What is going on right there? Anybody? What happened at 634 on the Russell right there? Let me put it a different way. Are we still in the confines of the range over here? Remember our discussion? Are we still in the confines of the range? at 634. No, it broke down. That's right. Good. And I would submit to you that the background is starting to turn red. The bars are red. We have a red stealth. And I would bet in a few bars, the mid-band is starting to stair step down. We're out of the range to the downside, which is what we wanted. Yes? We want the market to get out of that range so we can decide what we're going to do. So what types of trades might we be looking for right now on the Russell? Long or short? We're coming up on 6:35, 5 minutes into the market open. What types of trades might we be looking for now on the Russell? Long or short? Take a look at what the bars are doing. What do you think? Are we going to be buying support, or are we going to short rollovers at resistance? Kahat, Pat, Richard, Ralph, shorting a rollover at resistance. Downtrend forming. That's right, Ralph. We're looking for short trades. Most excellent. Absolutely. Trend has broken out of the range to the downside, and so we're looking to short resistance. Perfect. Okay, so here's what we're going to do. Let's do a little exercise together. Let's go ahead and look at the bars as if we're looking at them together in real time on Friday morning. And when you see a trade set up that you would take short, we all know the trend is now down, we're shorting, you type in a T. All right, here we go. Okay, let's advance the chart. 634, 635. It's heading down, 637. Remember, when you see a trade entry, you type in the letter T. 638, 640, 641, 642, 643. Okay, 645. We're 15 minutes into the market being open here at 645. 646. Okay. Coming up, 647. 648. All right, I'm going to stop right there. Now, I have to give out the gold star to most of you here this morning, because most of you, not all of you, but most of you, typed in the letter T when you saw these bars forming right here. And that was perfect. Yes, that was the trade. So let's recap. At the open, the Russell was in a range. We put our lines on the chart. We saw it. We saw the Russell break down. And what we're saying here in this particular case is we didn't get the initial thrust down, so we're not short yet. But we see the fact that the background is red. We make note of the fact that the mid-band and all the bands are stair-stepping down. Yes? The bars are predominantly red. Trend is down. We're looking for shorts. We have to remember and make note of the fact that we are not thrust traders, we are retracement traders. So the thing that really made me happy here is that as I showed these bars forming and the market was down here, nobody typed in a T, which is good. Because what that's saying is that you're seeing the fact that when you are in the thrust, in the case of a downtrend that is down, we do not take trades down here. We have to wait patiently for a pullback, or we call it a retracement, which perfectly happened right here. Now, in this case, we got very close to the mid-band. We didn't quite hit it with this wick of the yellow bar right there, but we came very close to it. This is almost a textbook short retracement trade. I see some of you took it. I see some of you took this. Good. Some of you, I believe we called this. I think I remember saying distinctly, if it gets anywhere up near 59.50 and rolls over, we're looking for a short. Does anybody remember that call? We actually called this. In fact, I think I actually took this trade. Good. Everybody did really good on that one. Good. Excellent. All right, let's do a couple more together. Let's do a couple more of these exercises because they're really good. What was the other instrument? NASDAQ. Stand by. Let's get NASI up here and crude oil. I don't want to run out of time to get these other instruments in. Let's try to squeak a couple more in real quick here. Hold on, it's loading. Uh-oh. NASI, be a good friendy now. Okay, NASDAQ is loaded. Let me go back to the open and look at NASI, Nazaroo. Spazzy Nazi, good for you. Hold on here. 630 is, oh, geez, a lot of bars here. Let's recreate the open on 630 for Nazi, just like Russell. Ready? Here we go. Now, if you were going to put some lines on NASDAQ at the open on Friday morning, where might you put the lines? This is support and resistance. Preparing to trade Friday morning for NASDAQ. Let me see if I can help you out a little bit. How about a line down here? So here's 630. Here's the open. We're going right into the open. Right? Down here. Good. And I see some numbers coming in more or less up here. So for instance here, just a quick note about this. As I said earlier, I wouldn't take 15 minutes to overanalyze and draw a bunch of lines on a chart. You just kind of look for some swings. That's just make it as easy as that. See how you kind of have a little bit of a swing here? Came down and bounced a little bit, and then you had a kind of a reversal right in here. Yeah, so just split the difference and throw a line right there. It's a visual thing, right? Yeah, and down here at the bottom, you can see it sat down here around this 22 for a little while. Right at the open, it broke it by a couple of ticks and bounced a little bit. Yeah, so here's your range, right? Is it tradable? Kind of on the lower end of it. You got support around 22, resistance 26, 4, 16, between 16 and 20 ticks. Lower end of acceptability. Borderline not tradable. Probably not tradable. I mean, even if you put the line here, that's tight. That's like 16 ticks. That's too tight. It's really not tradable. So what we're seeing here is that NASDAQ going into the open on Friday was in a range that was not tradable. I just want to be clear that we're all on the same page on what I'm saying here. And that you could put the lines on your chart too and see that as well as us, right? So what we want to do is in the morning when we open up NASDAQ or any chart, and we would suggest in the beginning of your trading to only look at one or two instruments. I think 3 or 4 or 5 is too much. And you take your 1 or 2 instruments and you put your lines right here. Boom, 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 done. Come into the room, and we'll be observing the same. We're looking at the same thing that you guys, everybody's looking at here. Okay. All right. Let's advance the chart. Let's see what old Spazzy Nazi did on. Excuse me. All right, here we go. Everybody ready? 630. And let's do a similar instrument. A similar exercise on this instrument here, NASDAQ. When you see a trade, I'm going to advance the first 10 minutes of NASDAQ. You type in the letter T. You don't even have to say what kind of trade you're going to take. Just type in the T when you would take a trade. Ready? Here we go. All right, here's 629. Here's 630. That's our range. Got our lines on the chart, 631. Okay, here's the real-time bars coming at you, 632. 633, checking the top of the range. Still in the range. Looks like the range is tightening a little bit, so you got a range within a range. Support now sitting, just pausing for a second at 632. Support just under 23, resistance at 27. 12 to 16 ticks. I saw a couple of T's come in here. I just want to be clear about this. What do we say? What do we say about this area? Remember? Are we calling trades in here like this? I saw a couple of T's come in. I just want to be clear before we go forward. This is not tradable. Okay, this is not, it's coming too fast. All these bars printed in a minute. And you're in a 12 to 16 tick range. Our minimum range is 20, 25, 30 ticks. We got to see a bigger range to make money. There's no meat on the bone here. This will chop you up. Please, 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 a million times please avoid this. There will be, here's another way to think of it. I know at the open, we all get anxious to start trading. I feel the same way. I just think it's a natural thing for traders. The market's open, you're anxious, your charts are up. It's a brand new day. We're going to make some money. I'm on board. We all are. That's why we do this, right? But it's still only 2 minutes into the open. The market's chopping around. We need to sit on our hands a little bit here, right? We got to wait. Be patient and wait. All right, let's move on. Still, popped up. Now, is this a trend change? Let me just pause it here. Nobody typed in a T. That's good. Is that a trend change from sideways to up? Is that a long trade there? What do you think? Nobody typed in a T. Good. No, it's not. That's a head fake. This is why we got to wait. Just to pause here for a second. We used to, many years ago, we used to be breakout traders. I'm saying like 10 years ago. In fact, a lot of our scripts were called breakout scripts. I don't know if anybody remembers that from like 8, 9 years ago. Remember breakout? We were breakout traders. And we learned through many, many painful losses, for lack of a better way to put it, that breakout trading is usually not the right way to go. We want to see a nice trend and retracements. Some of you remember that. Carl, you might remember that. Remember breakout? So what breakout means is that you come out of a range like this, and when we say the term head fake, what that means is that we have the appearance of what might be the beginning of an uptrend, like that we think this thing's going to take off like a rocket ship, right? And we want to jump on and ride that puppy, only to be spanked in the face with a sharp pullback right into the range. That's called a head fake out of a range right there. And it's prone to happen a lot on NASDAQ right around the open. And so, this is a case where you're only 4 minutes into the open. You really want to kind of stand down a little bit and just let her whip around, figure out what she's going to do. Okay? All right, let's advance it some more. And we're going to type in a T when we see a trade, right? Here we go. I'm not going to pause anymore. I'm going to keep it going. 634, 635, 636, 637. Let me open up the chart a little bit here. Just make the bars a little bit bigger. 637, 636, 637, 638. All right, I'm going to pause it right there. Okay, good. Excellent. Most excellent. I'm really happy. Everybody here saw that when we advanced this chart, that we broke out of this range to the downside like such. Here again, I was really pleasantly surprised and very happy that nobody typed in to get short down here. This is the thrust, just like we saw in the Russell, right? You come out of the range to the downside, background turns red, stair step down. We are looking for shorts on a retracement. And here we get it right here, right up to the midband. This was your trade right here. Yes, everybody typed in a T. Perfect. Excellent. Very nicely done. You patiently waited through all of this chop here, right? All that chop at the open. We waited. We didn't get head faked in, right? We wait for the break. We take the retracement. Bam, we're short. Now, that being said, let me advance this chart, and I want to show you what happens on NASDAQ. Remember the nice Russell rollover? Remember the YM trades? How nice and smooth they were at support and resistance? Let's take a look at Nazi. Here's what she does. Hold on. Okay, let me show you this here. Okay, here we go. How do we feel about the shorts now? Now you're at 640. You're at 641. 642. Uh-oh. What's going on here? What's going on with our friend Spazzy Nazi? All right, so let's go back. We all took the short here, right? Here's our short. Region box, short, came all the way down. Now, did this nice little short here get all the way down to our target, what we wanted at support? Did it get all the way down here? No, Spazzy Nazi, not good to you. Spazzy went to here and came right back in your face. Uh-oh. Right? Here you're in the green. You're swimming in dough. You're good to go. Bam. And then it rolls over and you're like, ooh, sweet. She's going to go down again, and I'm going to get that bottom. Nope, not going to happen. And by the way, just a heads up, this all happened in the span of about 2 or 3 minutes. Okay, we're not looking at 10 or 15 minutes here. You started to get into that trade at 6:36, and this all happened by 6:38. So like within 2 minutes, this is all going on right here. And then if you didn't tighten your stop, which you should have, your initial stop that is, so you got filled short here. Arguably, you probably did get a scalp out. That's probably 10 ticks right there. So I could see that you would get a scalp off. And let's say your initial 12 tick, 10, 15 tick stop was up here. You would have probably pulled it down, either within a few ticks of your entry or right at your entry. So maybe what I'm saying is this retracement might have stopped you out. And even if it didn't, it's okay because you still got a scalp. But definitely this retracement here got you out. Right? And then most of you, almost all of you, have typed in the fact that now you could take these lines that you have for support and resistance and now put them right here, because now you're in a lower range. See it? Oops, wrong line. See it? So what you find, what I'm trying to say here on NASDAQ is you're going to find that NASDAQ, this is typical of price action on NASDAQ when you're not in a long running trend move, is she tends to get into these ranges like this, okay? She'll get range bound here, she'll pop up, pop down. She'll get range bound here. Let's advance the chart. Right in the middle of it. See it? See the new range? Here, let me take the predictors off to make it a little more clear. There we go. See how now you're in that lower range? You could have drawn those lines here at 638. See them? I'm saying these ones right here. So you have two ranges. Everybody still hear me okay? I'm running out of time, by the way. I'll go another couple of minutes. Testing audio. For some reason, the audio has been cutting out this morning. People are saying that they can't hear. It's okay. Keep going. Okay. All good? All right, well, let's proceed. And then I'm going to wrap this up. All right, so essentially we have two ranges on NASDAQ, right? We have the upper range from the open right here. We by 6:36 we got one short off right here. We got stopped out. We got the scalper. We stopped out, and now we're in a lower range. Okay. Here's 6:42. 12 minutes in, still in that lower range. 6:45, still in the lower range. 6:50. Where are we? Still in that range. Can we all see how important these lines are to being able to see the range? We pop up, but have we broken out of the upper range yet? Nope. Nope. Where are we now? Yep, back in the upper range. I don't know if you remember. I'm trying to remember Friday morning, but I think at some point around 7 o'clock or maybe shortly before it, I think we just took the NASDAQ chart off and put gold in its place. Anybody remember that? Can everybody see why we did that? Were you in the room? Do you remember? I think we just slid the gold chart over, and Nazi took a little nap in the trouble chair. So I just want to be clear about something. Everybody thinks I hate NASDAQ, and that's not true. Okay, there are times when you can trade NASDAQ, and it's a very tradable market. Okay, and you can make good money at it. It can have very beautiful runs. So I'm not disparaging Nazi as an instrument. Okay, just to be clear. However, there are times when NASDAQ is in these very tight, choppy ranges where it can take your money. Okay, it can be a Nazi spazzy whippy little thing. And if you're not careful, you can get beat up in here. Let's go ahead and advance the chart and see when she eventually started to run. And then we'll wrap, okay? Hold on. All right. Let me show you. Let me show you. Stand by. Here we go. And I'll show you how you can see this. And it's not only NASDAQ. Okay, you know, lots of instruments get range bound. It happens. You just have to really figure out where the market's going and pull the trigger accordingly. Okay, here we go. Let me advance it, and then we're going to wrap. Still in the range. Back in the upper range. Yes, back in the upper range. 713. Upper range, 716. Okay, now make note of what happens here. Let's focus in right here. Now, if you recall, we put this line in before 6:30 ever came along, and it's held as resistance for the better part of like 2 hours. Right up here. So let me ask the question, do you think it's significant that this is now broken to the upside? What do you think? 2 hours we've had that line right there, right? She pops, pulls back, starts to take off. Yeah, you bet it's significant. Sure it is. That's huge. It's been in this range all morning, all the way since back over here. Right? That's a long time. Hold on. Now, a question. Do we take this trade right here? Is this the trade to take? Do we get long right here? Here, let me advance the chart. What are we looking for? Here's the thrust. That's right. That's right. You got to wait for the pullback. Right. Here's the breakout. Here's the thrust. Background is now solidly green. Bars are blue. Mid-band stair stepping up. We're thinking long, long, long on a pullback. Yes? Good. Chris, Peter, Ralph, right. You get long on a pullback. Good. Perfect. Absolutely. That's what you're looking for. Long on a pullback. Do we get it? Yep. We got it. Right there. This was another of those shallow retraces right here. All right, let's advance it and then wrap. And she starts to take off. You get another shot right there. See it? You had two chances to get long on NASDAQ. A shallow retrace right here. So we broke out of the range. There's our thrust. We retrace into a shallow support. We box it, tight stop. We get in, another thrust. If we miss it, we get a textbook mid-band retrace right in here with yellow bars touching and sitting on the region box right here, mid-band. And then off she goes. Another one here and another one there. Perfect. Good. Yeah. Okay, good. Let me stop the recorder. Thanks for coming, everybody.